Hello my people, welcome back to another video. Welcome back, traders. So today we're going to be talking about our strategy, our easiest strategy, and this is the strategy that you can always use to extract money out of the market. I've been backtesting and I can guarantee you it is around 85 to 90% accurate if you do follow the steps very well. So I'm going to be taking you through 3 pairs, I think 4. So we shall go straight to the charts. I don't want to waste a lot of your time. Guys who have not subscribed to the channel, guys, subscribe to the channel because you're missing a lot. Also, if you're watching our videos and getting some values out of it, kindly don't forget to like them videos. So I'll start from Euro AUD, and then all these pairs I've highlighted, I'm going to be talking through them. So I'll start with Euro AUD. Remember, the strategy is very simple. Step by step analysis. We start with top down analysis. We use support and resistance on high time frames to determine the direction, and then demand and supply. So top down analysis combined with support and resistance gives us the direction of the market, and then we combine it with demand and supply for our entries and exits, even stop trailing. So it is a solid step by step strategy that you guys can be using if you wanted to use it. It is what I use to enter my trades, and I can assure you it is a profitable strategy. So if you don't know how to analyze the market, please, this video is for you. If you don't know how to do or conduct forex analysis, this video is for you. So now let's go straight into the charts. So first things first, you want to identify the trend of the market starting from the high time frame. You can either use the daily or weekly. I prefer using the daily because it gives me the intermediary between not waiting for so long and not rushing into trades. But I also use the weekly specifically to see the turning points of the market. So now we start with Euro AUD. Euro AUD was moving within the strides of support and resistance. We had this daily support, and it also happens to be the weekly, and then we had the daily resistance up here. The daily resistance up here, like you can see it. So price hit this daily support and it started going to the upside. Why is it the daily support? Go to my first videos I put on this channel and you learn how to draw support and resistance. So after hitting here and giving us confirmation with this indecision candle, price started moving up. So it moved up to the daily resistance. Why is this the daily resistance? Because we have a head and shoulder pattern. People who trade chart patterns, we have a head and shoulder, and the shoulders of the market act as the resistance of the market. When price hits the shoulders, it is likely to drop or bounce off them. If you don't see them, you can go to the line chart. You see this is a left shoulder, head, and then right shoulder. So price was coming to bounce off this right shoulder, and after giving us the incision candle on the right shoulder, that was a past sign that we might be dropping. So now, how do we take advantage of this? Now after price has bounced off this, that is now where demand and supply comes in. You see, we are on the daily. We have determined the direction that it was an uptrend. However, after hitting the shoulders, it was likely to turn and become a down trend. Now we know that the direction is going to be going down on the high time frame. So when you drop down on the 4-hour or 3-hour or 2-hour, whichever you want, but these are the time frames I used for entries. Soon I'm going to be subscribing for TradingView Premium and include the 6-hour here because it is so important. So when you drop down, you're going to be looking for supply and demand. So now this one, you're going to be looking for only supply zones because we are looking to sales only valid supply zones. So when you drop down here, you're going to see that price made a rally, a base, a drop. Price creating a very clean supply zone up here. So this is a clean setup. So what you have to do is you're going to put here your entries. You're going to put your entries like this. and then your stop loss is going to be slightly below. So this one will make around 30 pips, like that, and then target the previous low. Now this one is almost 1 to 4, but the target should be on the daily time frame. So you should track your target from the daily time frame. Why do I say that? Because you want to look at opposing demand zones from the daily time frame. So you have an opposing demand zone here, because market respects demand and supply as well as support and resistance. So if it is a daily demand zone, you don't expect market to just go through it like nothing is there. You have to take note of that. I'm not saying that you move your positions out of here, but you have to take note of that. So 1:4 would end here with 138 pips. So that means you'll have to take out some of your position, probably 70%, and you'll let the remaining 30% run to the downside here. That is how you're going to enter that trade. But you see, we have been supported with support and resistance from the high time frame with demand and supply. So when you come to your 4-hour, this is what you would see. This is what you'd see. Price came, went up, retested into the zone with a sniper entry, low risk, and then look at how it dropped down. Now it has hit the supply zone, demand zone, bought up to here this week here, and now it has retraced back. I still expect price to fall up to down here. However, it is not a guarantee. So by now you should have removed some of your positions from there. So I'll proceed to that next pair, GBP CHF. Now GBP CHF, this is a trade I got on the weekly time frame. I want you to remember what I told you. We use support and resistance, demand and supply, then top-down analysis. When you combine them in the right order, you're going to get high probability trades that are going to give you maximum beautiful pips. So when you come to GBP CHF, and initially I was trading a few pairs, but now after discovering this strategy, I am confident I can trade how many pairs that I want to trade. That's why I brought almost all these pairs back, because when I'm able to determine the trend of the market and also identify valid demand and supply zones, then I'm unstoppable. I don't think it is any pair that I cannot be able to trade. Now, being that I get my trades on the high time frame, that means I'm likely to take long to get trades. So when I have many pairs there, I can average like 2-3 trades in a week, which is enough for me. So now on the weekly time frame, this is what we had on GBP CHF. Price had hit this previous support and then hit the support again, bounced off. Now it has hit the support for the third time. This is a triple top, and then on this support we have a clean demand zone. You see we have an indecision candle and then an engulfing candle, engulfing 1, 2, 3, 4, 4 previous weeks of previous price action. That means this whole month, because these 4 weekly candles make up a whole month of price action, were engulfed by only one weekly candle. This shows you that there is a lot of buy momentum in this area. So what do you want to do? You want to price to hit this area, give you some sort of a confirmation like an indecision candle, and you go up. So we had this indecision candle, and now this week has opened. Today is Tuesday, and you see it is indecisive, showing you some bullish momentum. If price action wanted to go down from here, it wouldn't be printing these small candles here. It would just open and start immediately going to the downside. But the moment that it bounced off and it is showing this indecision here, chances are high that we are going to the upside with this triple bottom. That is on the weekly time frame. We have a strong support and also a demand zone. Then we go to the daily time frame. When you come to the daily time frame, you can see a double bottom. When you stretch, it is triple, 1, 2, 3, but when you only have this current price action, you can see a double bottom. And I told you last week, price was going to buy. This was the Friday candle. I told you price was going to buy. So after Friday candle closed, the Monday candle opened and it was a bullish candle. Now we have today's candle, which is trying to retrace down, but I'm certain it is going to close as a bullish candle. So there is buying pressure here, and you see the way it bought when it hit this zone. So we drop down to the on the weekly. We also have support and resistance, and if you go to RSI is having divergence. I showed you last week. So when you come to the 4-hour, this is what you see, something that looks like a head and shoulder. I showed this thing yesterday. Price was around here. Look, it bought up to here, and now it is retracing, and I know it is still going to buy. So on the 4-hour, this is what you have. A head and a shoulder. So it got the line chart. This is a shoulder, this is a shoulder, this is a head, and we are having like a right shoulder. So it can come and sit here very well, or it can just stop here and go up. But the ideal case should be if it sits here very well and starts going to the upside, you're going to get a perfect head and shoulder. So the more you drop and see more candles, the more you're going to see the head and shoulder very clearly. So this one having a demand zone here, so expect it to tap here and we go. This is the 3-hour. So if you come to the 2-hour, it is now very clear. This is shoulder, shoulder, head, and this is another shoulder in the 2-hour. So GBP CHF is a long-term buy. I'm expecting GBP CHF to buy long-term. So if you're not yet in this trade, you should probably think about buying in this GBP JPY. This is what I expect in the market. We are going back here. And what is the pip count in that area? So if you start from here, you're going to get something like 250 pips. And what is the risk? The risk is around 30 pips. So that is a 1:7. You're getting a 1:7 out of this trade. So the trick is just you have to be patient and let price action play in your favor. So as you see price going up, just look for demand zones on the 4-hour, 3-hour, 2-hour, 1-hour. Demand zones, buy up to the upside. So that is GBP JPY. So we shall proceed to GBP JPY. Now this one is the trade that has happened this week, and I'm so impressed by this trade. This is the analysis I did last week, guys. I told you combine support and resistance, top-down analysis with demand and supply in the very order, and you're going to get the best out of forex trading. If you don't know forex trading, guys, and you don't know how to do your analysis, these videos that I'm making are for you. So you can adopt this strategy, and I promise you, you're going to have good trading days. So this is already a downtrend, and this is where we expect price to stand. Why do we expect here? Because there's a previous series support that is in this area, very strong support, which has also a head and shoulder. So I'm expecting price to come and land in this area and then bounce off. Where did I see this support from? It was on the weekly time frame. You see that weekly time frame, guys? This was a weekly zone. So when you open this is like a head and shoulder on the weekly. This is a shoulder, this is another shoulder, and now price is like coming to retest on this area, and then probably we would go to the upside. Or if we break here, then we shall proceed here. So this was a weekly zone. That's why I marked it there, and I'm expecting price to drop up to down here. So let's just pray that it reaches there. So I'll take you through a step by step, though I did it yesterday for GBP JPY. I'll just go through it again such that you can understand what was my thought process. So we had price making higher highs, higher lows, higher highs, higher lows, higher highs, lower low. So after reaching here, it made a lower low. If you can't see it, just always use the line chart. Higher highs, higher lows, higher highs, all these higher highs and higher lows. So price reached here and made higher high, higher low, higher high, lower low. This is a QM pattern. So after giving us a lower low, it left a demand zone here, a supply zone here. Then price retraced back, tapped into the supply zone on Friday, and then Monday opened and started dropping, and it is still dropping. So far it has dropped how many pips? It has dropped 150 pips, and I expect 200 pips. That is a 1:5. So when I go to my, this is my daily, and there is this engulfing bar that drops price action down, then it retraces, retest the engulfing bar, and now it is dropping. So let's just go to the lower time frames to get our our supply zones. This is a trade that I analyzed yesterday. I gave you guys, and now I think yesterday it was around here retracing up, and look, it has broken this previous high. And I told you guys some people were buying here as a demand zone because it broke the previous high, not knowing that we're on the daily resistance. So price was likely to fall down. So the moment price opened, it has fallen to 150 pips, and I expect it to reach here. So there was a higher high, a higher low, a higher high, and a lower low. So price was going to react from this zone and drop because this was a QM pattern, also consisting of a head and shoulder. People who trade chart pattern, this is a head and shoulder, just like the one that is on GBP CHF for a buy, it is on GBP JPY for a long sell. I think, guys, you can see how the thing is now becoming simple. You don't I know people who trade on the support and resistance. I know people who trade on the demand and supply. I know people who trade on the top-down analysis. But now, this one combines all of that. When you're trading on the support and resistance, you're going to miss out on key zones, especially demand and supply zones. And when you're trading on the demand and supply, you miss out on support and resistance zones. So if you combine all of them, when you're trading top-down analysis, you're going to miss out on entry spots, smart or tight entry spots. So when you combine all of them, you have a good strategy, but it needs when you have mastered each and every strategy on its own. That is what I did. I used to study these strategies. I paid different mentors to study these strategies, and I was studying. While I was studying them, I didn't know that I would combine the things to come up with a proven high probability strategy. Because I started support and resistance from 0FX, and then top-down analysis from Dapowidis. That one I didn't pay because I studied from his videos. Then I studied demand and supply from someone called Super Trade Academy. I think it's called Fahad. When I combined all the things, guys, they work like magic. They work like magic. You're going to minimize your losses, and then you improve the risk to reward and also the accuracy and the quality of the trades that you do take. Okay, so let's proceed. So this is GBP JPY. So now what happens is, now that the trade is moving well, so we have a well confirmed downtrend, what you have to do is you're going to drop down to 2 hour, 3 hour, or even the 1 hour and start looking for supply zones and sell. You just keep on looking for supply zones and keep selling until you reach to the bottom. So there was one here, drop base. This was a drop base drop, breaking this previous structure, and then price came, tapped into the area with the sniper entry, and it has dropped down. It was on the 2 hour. I think even on the 1 hour, it was on the 1 hour, it was even more clear. You would use this one here on the 1 hour, this one. So you'd get another trade on the 1 hour. It was drop base drop, price came, tapped into the zone and dropped massively. There was another drop base drop, a rally base drop here, a rally base drop, broke the structure, price did not retest into the zone, however it dropped. So in this leg you'd get one trade out of it, but I know people who go up the 30 minutes time frame would get even 2 or 3 trades out of this one. Okay, so you know that we are going down here. Your role is just to keep on looking for supply zones and sell up to when you reach here, because price has confirmed to you that it is in a downtrend from the high time frame. Okay, so now I'll proceed to the US oil. I have US oil. This is the last pair. So I have US oil, US oil on the 4 hour. On the daily time frame. Last week I told you US oil hit the daily support and immediately gave us this indecision candle. We bought, put stop losses here. US oil started buying, it bought 300 pips up to here. So when it reached the daily resistance, put in this indecision candle with a huge wick to the upside. It was likely to start selling because this was Friday, and I told you, what is this? Unexpected error. I've never seen this. So, and I told you US oil was likely to sell after giving us this huge rejection indecision candle from the upside. This is a daily candle. It was likely to sell when it opened on Monday. That was yesterday. Retracing here a little bit, I told you can sell, put your stop losses up here, and then we target the downside. Look at the Monday candle, how it ended, 140 pips, and then even the Tuesday candle is dropping. I expect price to reach this area, and now we shall decide from here what to do. Are we going back or we are breaking down? But for now, US oil is still in a range, and we have also a demand zone. This is an indecision candle, engulfing candle, and there's a break of structure to the upside. So when we see an indecision candle here, we shall be looking to buy US oil back to the upside. Guys, I have made trading so simple for you. We have just analyzed US oil. Last week we got 300 pips. We are already in 260 pips going to the upside, to the downside. Last week we got 300 pips to the upside. Analyze US oil on just one time frame. So how do you take advantage of this? Last week these trades were on the daily and we did not get any entries in between on the lower time frame. So I can just go to the 4-hour and show you. We did not get any entries. So we had a demand zone here, it was not tested. We had another one here, it was not tested. We had another one here, it was tested. This one was tested, but it did not go far, and you did not want to buy from here because price was almost at the resistance zone, so you didn't want to buy from here. And oh guys, there's something I'm going to show you that is so important. So even on the 3-hour, same thing happened. There was no retest on any zone. So if you don't get this zone on this trade on the daily, there was no chance for re-entries up to the upside. No chance. Maybe this one on the 1-hour, yeah, break of structure, but this incision candle was, this engulfing candle was not a good one. But however, price reacted from it and bought. And you know guys, these zones are always going to work out. Why? Even if it is a lousy zone. Why? Because price is already in an uptrend, so it's just looking for any opportunity to buy. So now we have sales, we've already contacted. Now this is why you would see a clear demand zone like this one fail to hold when price action comes back to it, because we have a break of structure. Price moved the indecision candle, 2 indecision candles, good engulfing candle to the upside. However, when price came back, there's also liquidity here. When price came back, just went through the zone. Why? Because price is currently in a downtrend, guys. Price has shifted, is in a downtrend because it contacted the daily resistance, so it is likely not to respect the 4-hour demand zones. The daily resistance or the daily supply is stronger than the 4-hour, 2-hour, 1-hour demand zones. It is likely to go through them. This is what you see what happened here. So for me, I wouldn't be looking to buy from this demand zone. Yes, I would be cautious of it. When I see it there, I'll be cautious of it. I would respect it, but I won't be looking to buy from it. Why? Because price has contacted the daily resistance, so it is going down. It is in a downtrend. So what do we need to do? We only need to look for supply zones and sell. Like I told you yesterday, when we get this supply zone, like this one here, it will be good to sell from. Price did not come back. So we also proceed to the 3-hour. Just look for supply zones and sell. 3-hour, the zone was clear, price did not come back. When I come to the 2-hour, the zone was there, even this one was there, price did not come back. When I come to the 1-hour, I see both of the zones are there, but neither of them price came back. So price just kept on dropping. So here, if you didn't enter from up here after the incision candle on the resistance, you missed out on all that move because it did not give you any entries going to the downside. That's why it is good to know all these strategies. So if you know that price has contacted the daily resistance, you're not likely to buy from the 4-hour demand zone because you're going to be burnt out. So I think that is all for today. I've spent a lot of time explaining you guys this strategy, guys. Learn it. Support and resistance, top down analysis, demand and supply. Combine them, you're going to see magic. You are going to understand the market better than 90% of the traders. Okay guys, so I think I'll end there for today. Kindly subscribe to the channel. I told you the first 1,000 people that subscribe, I'm going to put them in a Telegram channel, teach them how to trade for free. So kindly subscribe to the channel, and also don't forget to like the video if you have learned something out of it. If you want me to make a video about something, put it in the comment section. I'll gladly do a video about it. That is all for today. Have a lovely day.